Hello everyone, I hope you're all doing well. Today I'm going to be doing a lecture showing you guys the most high probability inversion that you can have when it comes to trading. And what I mean by that is basically if you guys are aware of inversion imbalances, it's basically when we get something like this, where price moves down, creates an imbalance on the left side of the curve, right here, and then a few moments later it gets displaced through, and we now inverse that imbalance. But there is a trick to this. There is something that you can look at which makes this even higher probability. And this is a repeating signature in price that often occurs around SMRs, and also in general is going to allow you to define your range. And when I say define your range, I mean specifically looking at areas that price could potentially want to react from, knowing which arrays to use and what to monitor. Because you can see already from the boxes here that I've drawn out, basically the reactions after these imbalances get inversed, you can see price is already using them. Now, why are inversions even important to us? Why do we care about these imbalances that have displaced? Why should we care about the imbalances? Well, if you've seen my video on invalidation levels, you know that imbalances are key signatures in price because they showcase displacement and they can often be used by price at a later point in time. And so if we know imbalances show us key areas in price, we can use that to our advantage, and we can know specifically this area price has shown an interest to before, or this area price is hovering around. So when you're looking for those moments of CSD and for that final entry confirmation, you know which areas of price to reference. So what specifically is it I'm looking for when it comes to inversions, and what is this high confluence imbalance that you guys can look for too? Well, I'm going to tell you right now. The issue with inversions is that a lot of people just choose whichever one looks the best, right? They choose whichever one's the closest that they think is going to work. But the key thing you want is you want to see an imbalance form as price displaces through an old high or old low. Now, preferably this should be an old session high, session low, such as London, Asia, even a daily high or low. This can also be a time-based high based on these 90-minute kill zones, for example, where price has formed a previous 90-minute high of this window. What happens then? We get a displacement through right here. This imbalance gets inversed, but then gets retaken. Price uses it as support, goes higher. Comes back down one more time. What happens? Uses as support, goes higher again. And this is what I mean. You can see this repeating signature, right here, London high. What gets inversed to the downside gets used as resistance, goes lower. What does it go lower into? Our next imbalance. So you see how these are playing within the range. And you'll see once we break above, the price comes down, hovers around it, used as support, and then hovers around this area before finally being allowed to displace at the right time, retraces into what? That same imbalance from all the way back here is being used here by price once time is right. And it doesn't even have to be a session high or low. It can be something like this too. If you take a look at this intermediate swing right here, notice how this imbalance goes straight through that, closes through this low. Once this imbalance has been inversed right here and price comes down, uses as support, is allowed to expand once again. For example, right here, previous daily low, notice how this candle displaced it. In order for this to work, it has to be displaced on the same candle. It cannot take it out with a wick first and then form the imbalance. The imbalance has to form specifically through the low. And then what happens at a later point in time, once price breaks above it, goes down into it, uses as support, goes higher again multiple times. And it comes back to this area. You can see it's referencing it here. And this is the beauty of this, is understanding that you're essentially defining areas of interest on your chart by looking at which levels got displaced essentially. So something like this is not something we would consider an imbalance displacing through an old low. You can see right here, this was not an imbalance formation. It has to be something like this. And if you start paying attention to this, you're going to see that this works on literally every single time frame that we have. The higher the time frame, the higher the session, preferably. Like you want a Asia, London, previous day, previous low. But you can see the power in using this imbalance. If you get an imbalance to the downside like this, we don't want to look for shorts from this. We want to look for buys once it's inversed. We want to use that as an area of interest for price to go higher from. You can see what happens here, goes down, shoots up higher. So this doesn't just apply to one specific time frame, it's literally every single time frame that we have. You can look for the same repeating signature in price. This is an inducement signature. It's basically price showing you clear manipulation, and we can use this range as a reference point at a later point in time. And when I say this works on every single time frame, I mean every single time frame. As long as you can identify a swing, a session high, session low on any time frame, you see it gets broken through with an imbalance. You wait for that imbalance to get inversed. What happens to that imbalance? Well, it gets used by price multiple times as an area of interest. It's showing you specifically which areas you want to keep an eye out on your charts, just with this one simple signature. If you start paying attention to this and you start seeing how price reacts to these areas on your chart, you'll know that there is something going on with these imbalances. With this signature, there's a specific reason for why it forms, why it's doing what it's doing, and this can significantly help you identify clearer CSD, identify a point where price should reverse from, should find support, should find resistance, so that you can help align yourself in your trades. Let's say, for example, we were looking to take part in this market maker buy model, where you have original consolidation all the way up here, you have manipulation down, and you have distribution. Now we want to catch this distribution leg. And even just using the 1 minute time frame, we can see right here, the imbalance we talked about right here displaces through this old swing low. Go ahead and mark that out, and you'll see the price used that, found some resistance inside of here, then displaced above. Once it displaces above this imbalance, that confirms your CSD. Automatically, if you have SMT here at a higher time frame point of interest, and you're looking to go higher towards a higher time frame draw, this already confirms it. We're at the right time inside of our macro window, displacement, retracement into that area, long pretty much right away. And here's another little tip for you guys. If you then go on a lower time frame, such as a 10-second or 15-second, and you're waiting for that retracement, don't just enter right away once it goes into the imbalance. Wait for price to displace away from it again, then get that second retracement entry. Because you want to see price actually find support inside of it. You want to see it slow down, and you want to see it reject. So that's how you can use the lower time frame to determine when you should enter on a retracement on the 1 minute. So that's a little tip for you guys right there. And what we want to see as well when it comes to older inversions that price has used prior, we want to see those get broken through to confirm that price is going to keep running higher, right? Because if we see that price is here and it's stopping, slowing down once it reached that same area that we saw price reject from earlier, this can be a warning sign that it might want to engineer even more liquidity, could go lower again, and then decide to go higher. So we just want to see that get fully broken through. Then price can go to our target or retrace and eventually expand towards that target that we have. Here's another example from a completely different day. You can see right here, the specific imbalance that formed as we took out these lows. What happens? Price displaces through it. You just wait for that retracement, and you can automatically target your original consolidations. See how precise this stuff can be. This is the strongest inversion confluence, inversion signature that you can have in price. If you specifically pay attention to these, the way you determine CSD and the way you're going to be looking at the markets moving forward is going to be way different. I'm telling you, this stuff is happening all the time. Displacement through an old high, gets inversed, price uses that resistance, goes lower. Same thing. Look at how many times price is referencing this area. So what do you think happens if you just wait for the right time, the right confluences with SMT, right here, take the short, and you already know what's next. When you see this at your SMR, you already know it's time. And just to be clear, For example, right here, this is not a valid imbalance right here. This is what I talked about. It got wicked out, right? It has to be on the specific same candle. Now, just to be clear, this shows the 90-minute sweeps right here. This is the line you're seeing, just to showcase basically the highs and lows I'm talking about. And you can see again and again this happens. Displacement with an imbalance gets inversed. You already know it's time. If you're confident in the SMR, in your entry, you can enter on that CSD, stop below the low, and you can trade it towards first target, first consolidation, and you just manage your trade accordingly. So yeah, I'm hoping you guys are starting to see it now, see what I mean by these inversions and how they highlight specific areas on your chart. Because I'm telling you, if you pay attention to this, you're going to see this repeats a lot. And when you see it, you already know what's going to come next. If you're anticipating that reversal, waiting for that imbalance, waiting for that to get inversed, it's already time for price to move. So with that being said, I hope you guys enjoyed this lecture and that you're now going to get something out of this. If you study this and you try to piece it together, apply these to the invalidation levels that I've already provided in previous lectures, you're going to start seeing things and start noticing these patterns in price, which are signatures of reversals. So I hope you guys enjoyed, and I will see you in the next one.